a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
We're going to talk about top-performing ETFs now with our ETF Research Director, Nina Mishra. Not just top-performing ETFs, but more specifically, top-performing ETFs of the best quarter since the financial crisis. Which quarter are we talking about, Q1?
Q1. So Q1 was really good for stocks. And stocks had taken a big beating in the fourth quarter, but in this quarter, this year, they started on a very strong note. And I think one of the main reasons was this dovish turn by the central banks. And while there are many concerns about slowing global economic growth, the U.S. economy continues to do well. And that also means that because the U.S. economy is not doing too good, too bad, it's just the right
temperature,
the right temperature, and further inflation is not picking up. So with muted inflation, the Fed is not expected to raise rates anytime soon. In fact, now the chances of a rate cut are higher than a rate hike.
Increase, yeah.
So that is seen as good news. Bad news is good news for stocks, and central banks in other parts of the world have also turned more dovish. That is seen as good for stocks all over the world. So that is why stocks have been doing well, very well in Q1. For many indexes, it was the best quarter since the financial crisis. For some indexes, it was the best quarter in many decades. So let's see how it goes, but so far, so good. So during the first quarter, the S&P 500 index rose 13%. The Dow was impacted a little bit by Boeing's woes. So it rose 11%, not bad. And NASDAQ, which is more tech-heavy, was the outperformer, rising more than 16%. And looking at the sector performance, of course, technology again was the best performer. Healthcare, which was the best performing sector of last year, was the worst performer of Q1, but that also rose 6%. Not bad at all.
Sure. All right. Good recap. You brought 3 examples of these ETFs that you wanted to highlight here. And the first one is ETF MG, Alternative Harvest ETF.
Ticker is MJ, and this is the first and only pure play US listed ETF focusing on cannabis industry.
Oh, and hence the word harvest.
Yes.
I got it.
Alternative harvest. So, and we have discussed this ETF in the past too. It was the best performer, rising 46% in the first quarter, and as we have discussed and I mentioned in the past, this is a volatile area. So they were beaten down. They surged last year, then they were beaten down, then they rose again this year, and they rose a lot this year. But pot remains illegal at the federal level in the U.S. So there are some concerns with the pot ETF investing as of now, but the ETF did very well. And apart from performance of pot stocks, pot ETFs in the US and as well as in Canada, they are making a lot of money via securities lending too. There was an excellent story in Bloomberg, I think yesterday, because most ETFs have securities lending programs. They make extra money via security lending, but in case of pot ETFs, because marijuana securities, those companies, those stocks, they have small float, and that is why cost to borrow is usually high, and that is why these ETFs made a lot of money in securities lending too. This is, as I mentioned, the only pot ETF as of now, but there are at least 3 or 4 in the pipeline, so we will see that if we see some competition in this space. Now, to...
Any idea, by the way, how many cannabis stocks there are? Do we know?
Yes. In the CTF?
No, just in general.
You mean publicly listed? There are more publicly listed companies in Canada because in Canada it is now
It's
federal.
Legal.
Legal.
Okay.
Both
Makes sense.
recreational as well as medicinal marijuana is legal in Canada. So that is why more companies are listed in Canada.
I see.
But many are now listing on the US exchanges too.
Okay.
Now, let's take a look at the CTF by going to quote page on Zacks.com. It's a bit pricey because it invests in a very niche area. So 75 basis points expenses. You can go to the external homepage using the link on Zacks.com, and you can look at holdings and other details: Aurora Cannabis, GW Pharmaceutical, Kronos, Canopy Growth, Tilray, all these high potential companies because pot is becoming more mainstream. Many alcohol and other beverage companies are investing in this industry, and there are medicinal benefits of CBD which have been documented via research. But still, remember that it's a very volatile space and it is still illegal at the federal level in the US.
Got it. So then that brings us to VanEck Vectors China, AMC, SME, China Next ETF. My gosh, the names that they come up with.
So the ticker is CNXT. This is a relatively smaller ETF. That's just about 38 million in assets under management. This holds small and medium size non-government companies which are listed on those two exchanges. So to learn more about this ETF, again, we can go to the quote page on Zacks.com. It charges 65 basis points. Again, a very niche area ETF, so higher expenses are justified. You can go to VanEck web page for the ETF using the link on Zacks.com. And as I mentioned, it holds 100 largest and most liquid China Asia stocks of companies which small and medium size enterprises listed on SME board and Shenzhen Stock Exchange. So these are these are mostly new economy companies, technology, healthcare, very innovative, small and mid-sized companies, and you will normally not find these companies in broader emerging market ETFs. So this is a very specialized area of the market. Now, Chinese ETFs and emerging market ETFs in general did very well in the first quarter because they were pounded in the fourth quarter.
In the previous quarter.
In the previous quarter, and then rising hopes for a US-China trade deal that especially helped China ETFs. Fed's dovish turn helped them. And in China, the Chinese government has been launching fresh stimulus measures to boost the economy.
Yeah.
That also helped smaller and medium-sized companies here. You can look at the holdings, but you will not see very familiar names. You will not see these companies in any of the other major EM or China indexes. But a very innovative ETF with the high growth potential and high volatility too.
All right. And finally, the ARC Genomic Revolution Multi-Sector ETF.
And the ticker is ARKG. So ARC has very innovative, actively managed ETFs in some very specialized sectors of the economy. This is one of them. This holds companies that are involved in genomics. And genomics, we know that a lot of new research, and new discoveries have been going on in this area of healthcare. So these are very innovative companies, and that's why this ETF has been doing very well. 75 basis points, which again is pretty reasonable for an actively managed, very specialized area of the market. You can go to the external home page, ARC's home page for this ETF. The as I mentioned, companies that are involved in genomics, including CRISPR, targeted therapeutics, bioinformatics, molecular diagnostics, stem cells, agricultural biology, all these high growth areas within healthcare and biotech. And you can look at the holdings too. These are some of the very innovative companies and very high growth potential companies, and again, volatile too.
And how do they all compare?
So on this slide, I have the first quarter performance of all these 3 ETFs, which I have compared with the S&P 500 ETF. And as I mentioned, the POT ETF surged 46%, the other two, China ETF and the genomics ETF, they surged about 37-38% during the quarter, whereas the S&P 500 was up about 13% during the first quarter.
Okay. Do you partake in, do you own any of these?
Yeah, I do not.
Okay. Thank you for that information. There's always more information on ETFs in the ETF section of Zacks.com. Use the Funds tab in the top toolbar to help get yourself there. Don't forget, on the podcast page, which you can access by going to the bottom of the homepage and clicking on the word podcast, Nina does ETF Spotlight, and you'll find that there, and you'll find that she talks with a wide variety of guests in that podcast, all of whom, I should say, are very interesting. With Nina, I'm Terry Ruffalo.